What if we told you that saving your first $100,000 could completely transform your financial future? It's not just about the money. It's about unlocking the power of compounding, building momentum, and shifting your mindset from surviving to thriving. In this video, we'll break down why $100,000 is such a crucial milestone, the challenges you'll face along the way, and the strategies that can help you get there faster. Whether you're just starting out or looking for new ways to accelerate your journey, this video is packed with actionable insights to help you take control of your financial destiny. Without further ado, let's dive in. Why $100,000 is a significant milestone. Saving your first $100,000 is one of the most significant financial milestones you can achieve. It's not just a number, it's a moment when everything begins to change. Warren Buffett's renowned business partner, Charlie Munger, once highlighted the significance of this milestone, referring to it as one of the most challenging yet revolutionary financial accomplishments. But why? Because it sets the foundation for everything that comes next. The habits you build, the discipline you develop, and the momentum you gain at this stage define your financial success. Reaching $100,000 marks a shift in how you think about money. It's the turning point where saving isn't just about cutting back. It becomes about building wealth. It's a mental transition from "can I afford this" to "how can I grow this?" But how do you get there? And what exactly changes once you do? The magic lies in these questions because understanding the impact of $100,000 is just as important as the journey itself. So let's start with the struggles that everyone typically faces before achieving this milestone. The struggles before $100,000. On the quest to achieve $100,000 and more, staying on track means dodging a few pitfalls that can quietly derail your progress. These mistakes often creep in unnoticed, but their long-term impact can be significant if you're not paying attention. Thankfully, with some awareness and strategy, you can avoid these traps and keep your momentum going strong. One of the biggest culprits is lifestyle inflation. This is where spending creeps up as your income grows. It's tempting to reward yourself after a raise with a shiny new car or a new apartment, but these upgrades often soak up the extra cash that could have fueled your savings or investments. Over time, this pattern can leave you stuck in the same financial spot despite earning more. So, what's the secret? Resist the urge to inflate your lifestyle and prioritize increasing your savings rate instead. Automating deposits into your investment accounts or emergency fund makes this easier, keeping your priorities intact while eliminating the temptation to splurge. Another mistake is neglecting to put your money to work. Once you've built some financial stability, letting extra cash lie in a low-interest savings account is easy. While it feels safe, it's a missed opportunity to leverage the magic of compound returns. A diversified investment portfolio, spanning stocks, bonds, and perhaps even real estate, helps you grow wealth while managing risk. By spreading your investments, you protect against market ups and downs while maximizing your potential gains. Ignoring this step can slow your progress and make it harder to hit your financial goals. Then there is the pitfall of giving up too soon. You see, the early stages of saving can feel painfully slow, with progress that seems almost invisible. It's easy to lose motivation during this phase, doubting whether the sacrifices are worth it or if your goal is even realistic. But the truth is, the beginning is where the foundation for future success is laid. Every dollar saved or invested at this stage has more time to grow and compound, creating a ripple effect that accelerates your progress later. Celebrating milestones, like hitting $10,000, then $50,000, can keep you motivated and give you a sense of accomplishment along the way. By keeping lifestyle inflation in check, seizing investment opportunities, and staying consistent even when the going gets tough, you'll build a solid financial foundation and set yourself up for long-term success. Now let's talk about the power of $100,000. The power of $100,000. Undeniably, reaching $100,000 is a game changer because it harnesses the true power of compounding returns. At this milestone, your money begins to generate substantial returns to make a noticeable difference. This compounding concept occurs when the earnings on your investments are reinvested, creating a snowball effect that accelerates growth over time. For example, if you invest $100,000 at a 7% annual return, your portfolio grows by $7,000 in 1 year without additional contributions. Compare this to someone with $10,000 invested at the same rate. They only earn $700 in that same year. The difference highlights why the first $100,000 is so transformative. Once achieved, compounding momentum makes it easier to build wealth faster. The impact becomes even more striking over longer periods. At 7% annual growth, $100,000 doubles to $200,000 in just over 10 years. During this time, your initial contributions may remain minimal, while the bulk of growth comes from investment gains. This self-sustaining growth is why many financial experts emphasize the importance of reaching $100,000 as quickly as possible. It's the turning point where your investments start doing the heavy lifting for you. Psychologically, hitting $100,000 can feel like breaking through a financial barrier. It provides a tangible sense of accomplishment, replacing doubts about your financial trajectory with confidence. Many people describe a mindset shift at this stage. Rather than stressing about day-to-day expenses, the focus transitions to long-term wealth-building strategies. It's no longer about scrimping to save every dollar, but optimizing and growing what you already have. This milestone also encourages a more proactive approach to finances. Investors often become more deliberate, exploring diverse investment options or fine-tuning their portfolios. With $100,000, you're more likely to seek higher returns or diversify into areas like real estate, index funds, or other assets, knowing that the stakes are higher, but so are the rewards. This is the threshold where compounding takes over and wealth building becomes achievable and inevitable with the right strategies. So what do you need to achieve $100,000 faster? Strategies to achieve $100,000 faster. Now, reaching $100,000 faster is all about working smarter, not harder, by combining strategies that boost your income, trim your expenses, and make your money work harder for you. Think of it as building financial momentum. Each small change adds up, propelling you closer to this important milestone. One of the fastest ways to accelerate your progress is by increasing your income. And this doesn't necessarily mean working longer hours. It's about making strategic moves that pay off. Side hustles like freelancing, tutoring, or selling products online can bring in significant extra cash. Investing in yourself through certifications in high-demand areas such as IT, finance, or project management can also unlock better opportunities. But sometimes, switching jobs or industries is the most direct path to a higher salary. Studies show that people who switch jobs typically experience greater salary increases than those who stay put. By staying proactive and targeting growing industries, you can significantly enhance your earning potential and speed up your financial growth. At the same time, controlling your expenses is crucial to making your money stretch further. Even small savings can snowball over time. Cutting back on discretionary spending, like dining out or paying for unused subscriptions, can free up hundreds of dollars each month. You can also try using tools like budgeting apps or simple spreadsheets to help in identifying wasteful habits and ensure you're allocating funds wisely. Also, have a well-structured budget to put your priorities, savings, and essentials front and center. On the other hand, automate your savings by setting up direct transfers to a high-yield account to keep you consistent and eliminate the temptation to spend. Then, once in a while, regularly review your budget to ensure you're staying on track and adapting as needed. To accelerate your journey, making your money work as efficiently as possible is also essential. Take advantage of tax-advantaged accounts like Roth IRAs and 401ks. They are invaluable tools that allow your investments to grow tax-free or tax-deferred. Many employers offer matching contributions for 401k plans, which is essentially free money to boost your savings. For emergency funds, try high-yield savings accounts. They offer interest rates of 4% or more, helping your money grow faster than in a traditional account. On the other hand, investments like low-fee index funds or ETFs provide market exposure without the drag of high costs, ensuring more of your returns stay in your portfolio. By focusing on these strategies, earning more, spending smarter, and optimizing your savings, you can reach $100,000 faster while laying the foundation for even greater financial success. Every effort, no matter how small, compounds to bring you closer to your goal. And when you get there, the feeling will be remarkable. Life after $100,000. At this stage, the financial snowball begins rolling downhill, picking up momentum every day. The most noticeable difference is the decreasing time required to reach your next milestones. While the first $100,000 might have taken years of disciplined saving and investing, the second $100,000 typically comes much faster, often requiring less than half the time. Add consistent savings on top of this, and you're on a much faster trajectory. By the time you reach $200,000 or $500,000, your reliance on active saving diminishes. The bulk of your growth comes from investment returns rather than your contributions, making it clear why wealth begets more wealth. This is the point where your money works harder than you do, and the focus shifts from aggressive saving to strategic investing. The psychological benefit of this phase cannot be overstated. The hard part, getting to $100,000, is behind you. Now your role is maintaining discipline, allowing compounding to work its magic, and making strategic decisions. It's no longer about pinching pennies, but about optimizing your portfolio, managing risk, and setting long-term goals. Life after $100,000 feels less like a grind and more like a strategy game, where each move contributes to faster progress. The shift is not just financial, it's a mindset transformation that sets you up for even greater success. This is why reaching $100,000 is important. It's a transformative achievement that changes how you think about money, invest, and plan for the future. Along the way, you've learned the value of discipline, the power of compounding, and the importance of balancing income growth with mindful spending. Every dollar you save, every investment you make, every financial decision you approach with intention moves you closer to the life you envision. So, what do you think about reaching $100,000? And do you have strategies of your own to share? Drop your thoughts in the comments below, and don't forget to give this video a thumbs up and subscribe to our channel for more insights and videos like this one.